Hi, it's Natasha.
And Khalil.
And we are the co-hosts of
WokeNFree.
Thank you for tuning in to our 55th episode of WokeNFree. If you've been tuning in every week for WokeNFree Wednesday, you know that WokeNFree is all about being real and honest with each other and you. We talk about everything and anything that is important to us, to you, and the world, and nothing is off the table. In this episode, we're talking all about whether you should invest in the stock market. But before we dive deep into the subject, I have a couple of questions to go over. First, have you subscribed to WokeNFree on iTunes, TuneIn, Stitcher, Google Play, YouTube, SoundCloud, and iHeartRadio? If not, please do. We greatly appreciate your support of the show. Second, have you shared an episode with friends or family? If not, please share. Sharing is caring. Next, have you hollered at us on social media? If not, you can find us on Facebook, Instagram, and Twitter at WokeNFree. Then lastly, have you reviewed one of our show episodes? If not, we greatly would love to hear your thoughts on our show. So you can go to WokeNFree.com and see where our show is on all different platforms like iTunes, TuneIn, Stitcher, Google Play, YouTube, SoundCloud, and iHeartRadio, along with other platforms. So with that,
I know you listeners probably already know, but each week we like to share a little bit about us before we dive into the topic for the episode. Last week we shared our greatest foreign accent. This week we're sharing, do we prefer a fork or a spoon?
You couldn't have thought about anything else, huh?
This is a lot of listeners were actually wondering about this. They didn't have the courage to say it, but I had the courage.
You do
it took
realize
lots
they
of
have
courage.
Different function, right? Like
Yeah, but if you had to, I didn't just come up with this on my own. This came from a game. It was asking people. It was like doing a survey. You had to pick your side. You had to pick fork or spoon. Just think about it. If you could only have one utensil, which one would you have? So it's one of those type questions.
I guess a spoon, because I probably eat more soft things than harder things. So yeah, I guess spoon for me. How about you?
Yeah, the spoon's more practical, right? Because the fork, you can't eat soup with it.
Yeah, that's true.
But you're gonna just grab a bowl or put it in your hand.
Sure.
I don't know how you eat it. Yeah.
True.
So the spoon's very important. I picked the spork.
Oh, the combo.
Yeah.
Gotcha.
Those little plastic ones. Because then you
Yeah.
gotta get the best of both worlds. You can
Sure.
still poke at things and pick it up, but you still got your nice little bucket to like get your juices up in.
Yeah.
And then you can also, what we did in middle school, we used to spoon fight with them, so you can also do that as well.
You're such a ragamuffin.
That's what we used to do in middle school. We used to see if we could break that little fat part of it. And there was all different things. There were like calls you did, but we used to just play with all those sporks.
Hello, Hollis.
Now, it seems like a Manhattan elite thing to do.
Hardly.
All right. Maybe not then.
Yes, with that hoodlum.
Oh, come on.
I think it's time to get started. And first and foremost, why do people invest in the stock market?
I think it's a means to grow their net worth and build up an asset primarily for like retirement. And a lot of retirement plans, they actually place money in the stock market in the form of like mutual funds, which grows the money over time depending on what security or how the securities are actually performing. According to investor.gov, people also buy stocks for dividend payments. You know, you get those nice residuals each month depending on if the stocks pay out dividends. And then also the ability to vote shares and influence the company. People like to have a say in what the company's going to do and vote on certain matters that the company is dealing with. I think the bottom line, though, is people invest to make more money from their own money. So it's like make your money work for you, not you work for your money.
True. I think Tony Robbins would totally agree with that statement. Also, to add to the conversation on fidelity, stocks and stock mutual funds, or ETFs, have, I think you might have said this.
Traded funds, yep.
Yep, have the most potential growth compared to bonds and short-term investments. So it's more bang for your buck if you do invest in stocks. Also, if you're looking to kind of have something years away, like a retirement plan, this might be able to further your money along, assuming that everything doesn't go up in flames. circa 2008 and 2009, but then also it's not one or all with the stock market, which is...
But even with that, just to add in, the stock market did bounce back. It's
it always does historically.
That's what's pretty funny. It's not like, oh no, it's flames, everything is ruined. It's more like, oh, you know what, I'm going to have to wait a couple more years for my money to get back to where it was. Yeah. And then I can pull out of the stock market. It's like that.
Yeah, there's historical ups and downs, and it goes up and down. And to be honest, people make probably the most money if you buckle down when it goes down, because you can get everything for like really, really cheap. So it's like crazy. Well,
yeah, some people really make money off of the downturn.
There's a ton of people who made a lot of money when the financial crisis happened, because they were able to see past the crisis that most people were concerned about, even though, it's scary to think, wow, I should buy stuff when it's like 15 cents on the dollar.
And then, people also, I mean, I'm not going to get into exactly how it works, but just to mention that you could buy stock options where you kind of bet against the stock. So you basically bet for the stock to go down, and you're able to sell it at the higher price point, and you make money. So there's ways to make money even when stocks are going to go down. It just depends on how you want to play your cards. With options, you can do lots of stuff. There's lots of ways to buy stock. We're not going to get all into the nitty-gritty details of that. I mean, this is more like just a beginner's kind of like introduction to stocks.
Oh,
That's
yeah,
what we're doing.
Yeah, we're not financial experts.
Yeah, we're not going to give you
speak
all
with
the
a
keys.
Professional if you're looking for real hardcore stock market advice. I think this is a conversation about the market.
We're just going to whet your appetite.
Exactly.
What are the benefits of stock market investments?
Okay, well, according to this article on The Balance, they have a wonderful breakdown of some really interesting benefits as well as downsides, which I'm sure we'll talk about. So on the benefit side of things, they go through saying stock ownership takes advantage of a growing economy. So when things are going well, right, company earnings go well, people get fatter paychecks, it's, consumers are shopping, everything's lollipops and sunshine. So the stock market is in tune with that, and so that's really great. They are the best way to stay ahead of inflation. Historically, stocks have averaged an annual return of 10%. That's better than the average annual inflation rate of 3.2%. So that means that you must have a longer time horizon, and that way you can buy and hold even if the value temporarily drops. Compare stocks, inflation, and the gold price in history. So you can go to the article. You'll find it on WokeNFree.com to read more about that. They're somewhat easy to buy. You don't necessarily have to, really rack your brain out about
easy to buy.
How to get that. You make money in two ways. Most investors intend to buy low and then sell high. They invest in fast-growing companies that appreciate in value. They're attractive to both day traders and buy and hold investors, and the article goes on and on. Again, you can find it on WokeNFree.com, and then also fairly easy to sell. So I think that can be really exciting when it comes from an investment tool, because unlike other types of things that you buy, they aren't necessarily as easily movable like real property would be compared to the stock market.
Yeah, investor.gov, it coincides with what you're saying. They mentioned that it offers investors the greatest potential over the long haul. And specifically, they say after 15 years, there's generally strong positive returns.
Yeah.
So they give you kind of like a time period of when you can really get the most bang for your buck. Mm-hmm. But you just got to hunker down, and you can really
it's a long person's returns. Game. It's definitely not like you're not investing in the stock market, I think, in like 2 years to try to make up all, be Warren Buffett. I think it's...
Well, that's beating the stock market then.
Yeah.
There are investors that try to do that, but you don't have to, though. You don't have to be that guy trying to beat the market, you know. And Warren Buffett actually, he argues against that for most investors. That it's not a good idea to try to play the market or anything.
Short of being a seer, I think it would be very difficult to always be right. Maybe you'll be right some portion of the time, but I don't know if you're going to be right all the time.
Yeah, you can't. And historically, nobody has.
All right, well, we talked about the positive. What would you say are the challenges associated with investing? Since you invest, I think you can definitely add insight there.
Yeah, I think if the share price decreases below what you paid, then, that's when you're at a loss, and people definitely fear that. And you can just compare this to, like, a bank, where as long as it's FDIC insured, you're guaranteed your money you put in there up to, I think it's it's 250,000.
50,000,
I don't know if it went up, but somewhere around
Maybe,
that amount. But you know, you guarantee to get that money if it's in a bank. It's not like that with the stock. You also need to be a somewhat savvy investor to obtain like the right stocks that grow your portfolio. But there's another option out there for people that really want to, that they don't want to like go and pick individual stocks. There are the mutual funds, and then there's specific type of mutual funds that are the best for investors, which we can get on to later. That'll come up.
Gotcha. Yeah. Again, that balance article that I was referring to earlier, like I said, they gave the sunny side up and the sunny side down version of what's going on with investments, and you can find all of our research that we're talking about on WokeNFree.com. And the balance says you could lose your entire investment. That's definitely a challenge. Yep. That's a hell of a day kind of challenge, but it's not the end of the world. It's just a part of the risk to know about. Stockholders are paid last if the company goes broke. So even if you are doing what you need to do, if the company you're investing in has issues, that's something to definitely think about. Again, this isn't a quick and dirty game, right? This requires a lot of time. Not as much time as maybe certain other types of investment tools like real estate, I think might be, unless you're in the flipping game, I think real estate typically is a little bit of a longer investment time. But again, obviously you should speak to a professional financial advisor who can like break down all of that good stuff for you. But last couple of points would be, there's a certain emotional roller coaster that some people kind of get caught up with when it comes to the stock market. You can avoid this. I read a book by Tony Robbins. It was really, really phenomenal. We'll share that in on WokeNFree.com so that you guys can check that out, because it doesn't have to be that way, but a lot of people do get caught up with the emotional roller coaster of all of this. And then also how I think people get a little bit unnerved about your performance compared to like professionals and people who have maybe doing this for longer than you have been doing it. Is your knowledge and expertise going to be enough? But I would add to that, you could say that about anything. So I don't know if that's like a real downside, but
Now, should everyone invest in the stock market?
I think if you financially can afford to do so, if you can bear the risk that comes with the investment, and this is essentially not money that you're playing with to put lights on and pay your mortgage, but this is extra. This is kind of money that's like icing on the cake. Then absolutely. So I would say it's all going to be based on your financial situation. What about you?
I just think it's a wholeheartedly yes. I think it's a great way to save for the future, and there are new ways to invest for people that don't want to do all the research. Okay. So it's not. I don't think the bar is as high as it used to be, and there's all these new brokerage firms out there that you can actually go to that they do all the hard work for you, and even in terms of pricing, there's things called penny stocks, which if you can't afford to buy just a full stock, you can do the penny stocks, and some of the firms also let you purchase percentage of stocks. So,
gotcha.
Like, let's say you can't afford Amazon, which is around $1,700. Maybe you can buy like a third of it for a lot less. So there's things like that as well available to people. I just think there's different levels to it. If you're at a certain income bracket, you would invest more, but if you're at lower, I still think it's a good idea to just purchase some stock. There's no loss at it, especially one that provides dividends. Then hey, you're going to earn money like every month from that stock. So I think that's worth it in the long haul.
Gotcha. You just have to be mindful about also some of the fees that are involved when you work with certain types of, I don't know if it's brokerage houses like you're
saying.
There's
some that's actually free. So
yeah,
there's you gotta get, depending on what level you're at, you definitely have to be concerned about the fees. But there's also fee-free ones, which if you're a beginner, you can just start off on that because that's just easy.
Yeah.
There's some that there are no fees. You can just buy and you're fine. They might not provide all the resources and tools as the other firms, but if you're just trying to jump in there and just see how it goes, you do have that option. There are definitely options out there. That's what That's what I like to let people know.
Gotcha. And what would you say are like key resources for learning how to dive deep and invest in the stock market world?
Well, since we're out of this day of like paper books and going to the library,
Speak for yourself.
I think you can go to some nice online tools, and
Okay.
they really do help with learning how to invest. And one good one in general is NerdWallet. They have some stuff about stocks, and of course we have the link up there. And just in general, how to like save and financial tips. But NerdWallet is definitely great. Like just by doing research, they pop up all the time, and they'll give you like certain stock advice as well. They're a good resource. And then also, like I was saying, was the broker firms themselves. So you can sign up with like E-Trade or Ally Invest, and they'll actually provide videos and courses, and they have seminars. They have actually in-person conferences. They have all sorts of things that you can do just to really increase your knowledge. So, I mean, I think just going through the brokerage firms themselves is a good idea.
Okay. I think that there's several resources as well. Beginners-investing.com is one website that I came across that seemed to have like a lot of really interesting information. Tony Robbins, like I mentioned earlier, I'll share his book. He has a couple of money books, but the most recent one that I read that was about the stock market I found to be truly eye-opening. Then also Investopedia, Yahoo Finance, Motley Fool, The Street, Wall Street Journal, of course, MSN Money, Zacks Investment Research, Investor Guide, Seeking Alpha, and then you mentioned, of course, the online brokerages themselves, Share Builder. A lot of people have used them. You mentioned the E-Trade. There's Trade King, Scott Trade, Options House. There's a plethora of information out there. So as per usual, you can never be like, oh, I don't know, where do I get started? None of that's ever going to apply. Get a grip. And do some research, but I definitely think that this is not something that's just going to naturally happen. I think this requires work more so than maybe other things you have to do. And so if you're willing to put in the work, I think, there's a lot of really good resources out there that can really help you get started.
But aren't there like misconceptions about the stock market?
Indeed. There's plenty. I actually found on Investors Business Daily. I don't know if I'll get through all of them, but I'll mention some of them. So they wrote, number one, the stock market is nothing more than gambling. That's not true. I think that it's more than just going to Atlantic City. I think that that's definitely a misconception that has no merit. There's also a misconception that if the stock market is such a great deal, why aren't you rich? Oh, that's interesting.
That's a good one.
So assuming that everyone who does it should just be like millionaires or billionaires, right? No, not necessarily, right?
That's a good one.
Yeah, another one that they shared was, all you need to do is find the next big thing and hold on. I get that. What are we talking about? Like horse racing? I mean, this is like, no.
Well, is this advice or what is this? Or I don't get this one. Like, is this a...
It's sharing all the things that people think that like are
But when you say big thing, you mean like big thing in terms of like
stock,
a stock?
Probably, yeah.
Oh, okay. They're talking about find the next big stock that's gonna boom,
or the next big company or something,
and then no
buy
matter
in like their IPO,
and then you're
or
rich,
something.
right?
Yeah.
Then you're just gonna dance in the money.
Yeah, exactly.
Gonna have champagne showers.
You can't time the market. That's not true. The market has cycles. It's had historical cycles that you actually can track. The stock market is all luck. Again, this isn't about,
That's pretty funny.
Chinese leaves. Like, you have to look at, and, like, that doesn't make any sense. It's no. Another one, insiders have too many advantages over the individual investor. Interesting.
No, this isn't supposed to occur. That's why we have the SEC.
I think,
That's the whole point of the SEC, and that's why they shut that down.
Yeah, no, I think we have a lot of
happen.
checks and balances. I mean, maybe there are people who are violating
that. You
that.
gotta be very careful.
I wouldn't know about all of that, but I think that based on the people that get sent to those fancy prisons, I think that, the SEC is determined to have this be an equal playing field somewhat.
Yeah, they have to. Otherwise, it wouldn't be fair.
Point,
and it wouldn't work. It wouldn't work if insider trader was that prevalent. It really wouldn't.
Yeah, and then also the last one they mentioned was the market is never wrong, which
What
is...
does that mean by that?
So yeah, they say this has its roots in the time-honored advice not to fight the trend. Generally, that's good advice, but the market can be temporarily wrong. When a stock reacts to a rumor that's false, the market must correct the error. Often that is done very quickly, which is why trying to outsmart the market is a loser's game. Interesting. So you'll find the article on WokeNFree.com. You can read and laugh about it, I guess, as well.
Yeah, I like to add that I think people think you can only make money with like huge investments, and that's false. I was saying you can invest in penny stocks, and you could make money off of that. There's not...
Wolf of Wall Street.
Yeah. Let's try not to do it on that kind of level. Let's not try to get involved with scumbags, but if we keep on the up and up, you can earn money.
That was something else.
Yeah.
Yes. Have you, hey, WokeNFree Nation, did you everyone see Wolf of Wall Street? If not,
yeah, I saw it.
Definitely do. That movie rocked our world. We still laugh about it.
Yeah, there's like classic scenes in there that'll always be remembered.
Yeah.
I'll just say the Lamborghini scene because I don't want to give anything away.
Yeah. What was
Don't say it. Don't say it.
What was the drug? Oh, you don't need to mention the drug?
Oh, I mean, you can mention what the drug was.
What was the name of that again? I want to say opiate, but it's not opiate. It's like...
I forgot.
I know, but there was this drug that they were mentioning in the film that really was something else, guys. Check that movie out.
It might come back to me, we'll see.
Yeah.
And then I was going to say, people think investments all have the same level of risk, and that's not true either.
Sure.
Different investments have different level of risk. Some are higher than others. Some are less risky, and they're just... they grow over time at a steady pace, and some jump up and down like a rising wave and a pitfall, a valley. Like they're all different. So there's different levels of risk. They're not all as risky as each other.
Sure.
What are words of wisdom with investing in the stock market?
Yeah, I love quotes. So I found a couple that I thought were really interesting. I'll share my thoughts, or the ones that I came across. I will tell you how to become rich. Close the doors. Be fearful when others are greedy. Be greedy when others are fearful. Warren Buffett. So the king of stock investments gave you everything in that quote. I'll read it again. I'll say it just for you guys to know. I will tell you how to become rich. Close the doors. Be fearful when others are greedy. Be greedy when others are fearful. So, let that mull over in your mind. Next, investing, what is comfortable is rarely profitable. Robert Arnott. Interesting, okay. And then another one by another really great, profound person in the space is Peter Lynch. Says, know what you own and know why you own it. So, invest conscientiously, strategically, purposefully. Peter Lynch is another really, really well-known person in this space. So I would very much own and heed their advice, guys.
I like the quotes by John C. Bogle, author of The Little Book of Common Sense Investing. First one is, don't look for the needle in the haystack, just buy the haystack.
Oh, smart.
Second, the true investor will do better if he forgets about the stock market and pays attention to his dividend returns and to the operating results of his companies.
Interesting.
All right. That's that one I like. Another one. Gunning for average is your best shot at finishing above average.
Interesting.
Who would have thought that?
Okay.
The greatest enemies of the equity investor are expenses and emotions. So emotions definitely can mess people up in the stock market. It definitely does. People react and...
messes everything up.
You screw up, so don't get so emotional.
It's like a life principle right there.
Yeah. This is ridiculous.
And the last one is, the greatest enemy of a good plan is the dream of a perfect plan. Stick to the good plan. Traditional.
Interesting. Okay.
Yeah.
Very, very interesting.
Here we go, yo. Here we go, yo. It's time for the scenario. Scenario 1. Augustus has just been given the task to safeguard the money he earned from selling his dad's ultra-rare hot rod he recently restored with mostly OEM parts. He has the choice to place the money in a CD, a money market savings account, or invest it in the stock market. Augustus is in his late 20s and doesn't have any retirement savings. What should he do?
Clearly not the CD. I feel like no one has mentioned CD since we were 10 years old. So I say he should probably go into the stock market, but if he doesn't necessarily feel like he fully has all the advice that he knows that he feels like could help him, maybe seek out some professional advice, and that doesn't have to be working with a brokerage firm. It could be doing some research on his own, but I would say take a risk, go with the stock market. Why not?
Yep, I agree with that. I would just say take whatever amount of that money he has and make sure he can afford his life for at least 6 months without a paycheck of any sort or any income of any sort. So just make sure he has that just in his savings account, just so he's ready to go in case of any emergencies. And then with the rest of the money, he can go ahead and invest it in the stock market.
And don't buy a hot rod for himself. I know you guys like to,
hopefully not.
Keep it fancy, but let's keep it smart. That would
not be great.
No, it would not.
Yeah. Scenario 2. Miss Jackson is in her late 40s and has decided to take more control of her money. She has been working at the same company for 20 plus years and now has the option to actively trade stocks with money in her savings or purchase index funds through a savings plan at her job. Which should she do?
Index funds are the ones that are managed through someone else?
Index funds they're technically a type of mutual funds, but they have less fees.
Yeah,
and they always are buying. They're always buying every stock in that specific market that the index fund is in.
Yeah, no.
This is a special
Tony
type
Robbins
of fund.
Was mentioning the
this is a very
fund.
special type of fund.
That was really good. I think based on a little bit of what I read about, I think I would go the route of the index fund purchase. But that's what I think. What do you think?
And you are correct. If she actively trades, she's probably going to lose more money than she would get in the index fund. Because if she's actively trading, what she's hoping is probably to beat the market. Index fund says, forget that. I'm not going to beat the market. I'll just be the market, buy the market. And the market is always, our companies are always growing over time. And the index fund capitalizes on that. And your stock price goes up as the market grows. So in the end, you end up beating people that are like actively trading. And even mutual funds that might say, oh, 1 year we have a higher return, but then next year they may not. The mutual fund will grow over time regardless. So if you looked at a mutual fund compared to the index fund will always be worth more over a long period of time. So definitely go with the index fund. If you want to actively trade, that could just be with your fund money, the money she was going to use to like go on a trip or something that she didn't really need. She can put that money into actively trading. But
I love how she's going on some trip that she didn't really need, but you didn't even make that assumption that he was going to try to buy a hot rod or do something.
He's too young, so he knows better.
Get your sexist life together.
No, but you see what I told him? No, remember, she's older, so she thinks that, it doesn't matter. I can just spend my money how I want.
So now she's older and completely silly with money then.
Well, no, the problem is she just got control of all her money. What would the sane person do with that? What would the average American do if they ran into boatloads of money? If you're not Augustus.
Play Monopoly.
Augustus is different. Just think of him. He comes from a great lineage.
Moving on.
Scenario 3. Clarence is close friends with Lucilia, who is launching her company that offers tablets that look and feel like books on the outside, but have dual OLED screens on the inside. Lucilia is offering Clarence a potential deal of a lifetime by giving him access to Series A investing for her startup at a discounted rate. Should Clarence buy into this opportunity, or are business and friendships best kept separate?
That's a hell of a question, Khalil.
Yeah, this one's a double-edged sword. There's two things going on here. And this truly happens. People are faced with this every day.
Oh, Lordy.
People are definitely faced with this every day. With all the startups popping up, you know that.
Yeah.
Yep.
Oh, Khalil.
Why do you say me? This is the scenario. The scenario presents itself.
I would say that based on the facts presented, obviously I would still have more questions because you know how I am. But given if there's if we have a couple of premises to work off of, I'm going to assume that Clarence sees Lucilia's launching company, as seemingly profitable, as something that he is interested in this business and this startup. He's interested in the product line. He is. It doesn't have to be equally as passionate about her as she is about it, but he thinks that this is a good idea, and he thinks that this is going further. And he has the financial backing to be able to pursue this. Then yes, I would say, despite the friendship, I think that business, if you can make money, then you should move forward and make money. And if things do light up on fire, hopefully their friendship isn't tainted too much from it, but ultimately you want to make choices that hopefully can expand your wallet and give you more options in life. So I don't think that just because they're friends, they shouldn't necessarily be in business together, but I think that there should be clear understanding as to what he's getting involved in, and she should be completely transparent with the vitality and estimations of her business, and this isn't some weird, I'm doing something that no one else can do. Give me a $1.3 billion. Oh, JK, I can't actually do this. If you get my drift. But your thoughts?
So you don't think he owes it to her to buy in, even if he doesn't agree with the idea, since they're friends?
Oh, I'm saying he should do it.
Yeah, but you're saying he should do it only if he thinks it's a sound business choice. What if he thinks it's not that great? What should he do in that situation?
Well, why would you put money behind something that you don't agree
Because this is your friend, and it could ruin your friendship if you don't invest.
Well, it
That's
could
what I'm
ruin
asking.
your friendship. Could get ruined either way, right? So he could invest and it all implodes, and then
he's gonna be mad at her.
Yeah, and then he could invest and even though he wasn't for it, it still implodes. And yeah, so it's not that it's a losing proposition, but the risk of losing friendship can exist from anything. He could run over her cat and they could not be friends.
Oh, come on, lady.
Ultimately, your friendship can always get tainted by life scenarios. I think it's better to make decisions based on the business as opposed to on the friendship tip, because friendship, sadly, doesn't always last forever. So,
but businesses do.
Well, some businesses have lasted quite a bit long. I mean, we have the Rockefellers for a reason.
Forever,
right?
ever, forever, ever, ever.
Yes. So, I think you should think clearly about the financial benefit that can come from this. And so if he doesn't see the vision for it, then he most likely wouldn't put the money behind it. If he does, then he should. And, like I said, but be very clear and not be like, I'm doing this because you're my friend. Are you going to keep me up to date? Let's have dinner. What's going on? It shouldn't be that kind of weird. It needs to be he would be an investor like anyone else. It's not anything different just because they happen to
He's getting the discounted rate, though. That's one thing that other people aren't getting.
But I'm sure that there are other people in that series as well, so it's not going to just be him alone in the series that gets that rate, right? So,
no, well, in this case, she's only giving it to you.
I don't know what the financial and legal requirements.
She's only giving it to you in
that,
a small group of people.
Okay, yeah. I thought
that
there has to, when you say series, though, I think it just has to be more than one person.
Yeah, but this is a small group, though.
Yeah, so if he sees the value in the investment, he should move forward.
If he misses out on this, then that's the last time he gets that rate.
Yeah, God bless him. I mean, you have opportunities. Read the book Year of Yes by Shonda Rhimes, man. You got to say yes when the universe gives you these opportunities, and if you don't, you don't. But again, make the decision based on the business, not on the friendship, because like I said, he could, by accident touch her boob and they're not friends. You know what I mean? Like people.
Then they become best friends.
Okay, guy. Okay. What do you think you should do?
Definitely invest.
Regardless of any other factors?
Yeah.
Oh, interesting.
Because I don't know. It seems like an opportunity of a lifetime. So I would tell him definitely invest. As long as Lucilia isn't like a flaky person. Okay. If you trust her business sense. Because
gotcha.
What if Clarence is just not even that great at business? I don't know. I mean, he might not. I just say as long as Lucilia is a really. Mm-hmm. As long as she's a decent person, and remember they're close friends, so it's not.
That ain't, like I said, people's friendship fall by the wayside.
Well, yeah, for me, I go by since they're close friends, he should invest with her.
Yeah.
That's my opinion. And
yeah.
You say he needs to get a brain and figure out if this is a good investment and then invest.
That's think what you he say. Needs to use his brain and his head.
But he might not have he might not be
If she's so
very-
smart, then why is she hanging around with this nut? I mean, what are you talking about? Like-
This is the real situation. Happens more times than not. You know that too. You know that's true.
All I'm saying is I think that people overestimate friendships, and I think that people make decisions based on friendship, and they should make decisions based on business. Is this someone I want to be in business with? Regardless of friendship. It needs to be very crystal clear, because otherwise, then, like I said, if things implode, then all of a sudden the friendship gets affected. Just, was this a good business investment? Yes. Am I making money? Yes. Awesome. Keep it moving. If we're friends, cool. If we're not, it's not that big of a deal. Like,
All right.
Yeah.
That's some good advice. Hopefully people take it to heart. I don't know if they are, though. I think they're still just going to go by the friendship and give them money either way.
so when we get a bunch of emails of people asking us,
I'm not Clarence. My name's not Clarence.
and we are not Lucilia either.
That's what I'll say. Let you guys know.
Oh gosh,
You're going to learn today.
I need to go play Monopoly. I can't with you.
You need to play the game of life.
Oh, I love that game, guys. I love the game of life.
Monopoly is about just, being rude to people. And just treating people just like dirt.
Monopoly is about sending people to jail.
No, it's not. It's about
People
really...
get really excited about sending people to that side of the board game. They're like,
People-
you go to jail. They get really intense about it.
People like buying properties from other people and giving them
That's
terrible
true.
deals. That's what it's about.
I don't know. We stopped playing that 10 years ago, so I can't hardly remember it. But I do like the name.
I wouldn't say that's like the best introduction to the finance. It's a fun game, but there's a little bit more that goes into life.
No, you should
than
just
that.
read books about it and listen to podcasts.
I would even say
about
the
it.
game of life is a little bit more. That gives you a little bit more financial insight than Monopoly. Monopoly is just kind of like, maybe it's more of like managing people. You kind of learn.
Sure.
And you learn how
Which
to negotiate.
is a good skill set, though. To
Negotiating,
understand as well.
you learn negotiation. That's what Monopoly is
That's critical.
about.
Oh, yes.
Yeah.
Absolutely. Now, we are at that time again. Thank God. That's an interesting sound. It's the coming of the end of our 55th episode of Woke and Free. Really?
Who was
Really?
that? Oh.
I'm the man and now you're the woman?
No, you know what? Even though on that episode we thought there are no ghosts, was that just a ghost?
I would say something, and I would say it in
No,
the way
don't
that
say any of
Paul
that.
Mooney says it.
Don't say that
So
because
I will amend the
you
statement.
know what's crazy? Because just recently we bought this microphone that could detect ghosts, and that's what we're actually recording on. And so you heard that sound? That may have been the ghost that we captured.
Not expecting that!
Hey, people say they have these paranormal tools. How come we don't have it? Isn't this the paranormal microphone? It detects special E-waves that are only given off by the special
As
ghost
said
energy
by Paul
things.
Mooney.
No, don't say it. Just
Khalil,
continue on.
There are no ghosts.
No, you
But
said it. No.
You all know Paul Mooney and what he really says.
Yeah, he says invest in the stock market. He says people invest in the stock market. You're missing out. Just like that.
Exactly. This was quite the episode talking all about investing in the stock market and a lot of other rubbish. And
I would say gold, but if you called rubbish gold, that's up to you.
every man's treasure is someone else's trash, right? So
Especially if you're an alchemist like me. Yep. You talking to alchemist himself. Let's go.
oh God help you.
Come on now.
Will I leave you hanging for what our next episode will be about? Drum roll, please.
On our next episode, we will be talking about the real effect of global warming. Make sure you follow us on social media to follow along in the conversation, and make sure you tune in next week for Woke and Free Wednesday to join the conversation at WokeNFree.com.
If you want to be a guest on the show, please submit a topic for an upcoming episode or share how you feel on our Contact Us page at WokeNFree.com. That is WokeNFree.com. And of course, always feel free to hit us up on social media. You can find us on Facebook, Instagram, Twitter, YouTube at Woke and Free.
If you didn't already subscribe, please do, share the episode, and make sure you come back to join the conversation every Wednesday for Woke and Free Wednesdays. Remember, Woke and Free is more than a podcast. It is a way of life. Till next time.